Hi dear traders. Throughout the past week, traders continued to speculate on the possibility of an imminent easing of monetary policy despite statements from representatives of the US Federal Reserve. The first rate cut by the Fed is expected as early as March. These forecasts were fueled by news that the American economy did not grow as fast as initially expected in the third quarter, suggesting the need for monetary stimulus in the form of lower rates than currently in place. These prospects further intensified the selling of the US dollar. The US dollar index, reflecting the position of the dollar against a basket of 6 major currencies, dropped to a 5-month low, hitting 101.60. This marked the second consecutive week of losses for buyers of the American currency. Data presented on Friday only increased the desire to sell the dollar. The PCE index recorded a price decline, indicating that consumer inflation will continue to slow, leaving the Federal Reserve with no reason to keep rates at such high levels. Meanwhile, the euro gained over 1%, taking advantage of the dollar's weakness and strengthening above the key level of $1.10. However, traders are confident that the European Central Bank is also prepared to lower rates and may soon decide to ease. The Eurozone economy shows more signs of recession than the US, yet the markets are currently actively pricing in the likelihood of a rate cut by the American Central Bank. The UK economy is not doing great either. The data on the growth rate of the British economy has been negative, indicating a downturn and the risk of a recession. However, the retail sales report is still trying to keep the focus of optimism on the British currency, resulting in the pound gaining 0.24% last week. Regarding the prospects of a change in the Bank of England's policy, investors are confident that there could be as many as 5 rate cuts of a quarter point in 2024. There is also a 70% chance of a 6th rate cut, contrary to the statements of the Bank of England's Governor Andrew Bailey, who emphasizes the need to maintain higher rates for a longer period. Inflation remains almost twice the target of 2% and is the highest among the G7 countries. In the American dollar Japanese yen market participants are evaluating the prospects of a change in the monetary policy of the Bank of Japan. Inflation in Japan has slowed to a 16-month low but still remains above the annual target of 2%. Following the last meeting, the monetary policy rate remained unchanged, and more importantly, no comments were made regarding possible adjustments. It's quite clear that the US Fed will start changing its course faster than the Japanese central bank. The weakening of the US dollar and the decline in treasury yields have triggered a flow of investment capital into the traditional safe haven assets like gold. As a result, the price of the precious metal has risen by 1.6%. In the meantime, the commodities market shows a confident bullish trend. Here, the informational background took the lead. Due to increased attacks by Houthi rebels on oil tankers passing through the Red Sea, global transportation conglomerates have decided to change the trajectory of ship movements. Oil supplies in the Red Sea this week fell by more than 40% compared to the average daily rate for the previous 3 weeks. However, the impact on oil supplies is currently limited, as the main part of Middle Eastern oil is exported through the Strait of Hormuz. In addition, there was an increase in crude oil inventories in US oil storages, preventing oil prices from rising above $80 per barrel. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!